Good morning, everyone. I hope you guys are doing well. It's me, Adnan Rahman. I'm the market analyst for Errante. In this video, I'll explain you each and everything regarding the US CPI as it's the most important event for now for the week. And it adds up to the rate cut or rate hike story, the monetary policy. Okay. So it's very important news event, and that is what we need to focus on. So the way I've designed this video is first I'll explain you each and everything regarding the US CPI, okay? And then I will take you to what the Federal Reserve has said as regarding this inflation story, and then we will move towards the court report, and then we will look at the CZ charts, and after that I'll show you and explain you what pairs can we watch in terms of if there is a weak print, okay, a softer print of CPI or a hot print of a CPI. Okay, I'll explain you each and everything. So without wasting any time, let's start. Okay, this is the US CPI, the headline one. Okay, keep in mind because the videos from Errante are educational purpose as well, and they are analysis purpose as well. Okay, so what do we know when we have the word, there is no word written with the CPI, that means it's considered as headline. Okay, headline. And then for the core, you have this core word written with it. Keep this in mind. This is for you guys who are new into this fundamental analysis. Okay, we have the CPI. I'll take you to the headline CPI, and what we can see is, please focus over here, that from the 10th of October, we had this CPI moving towards the upside, okay, like 2.3, 2.6, 2.7, 2.9, and now 2.9 is expected as well. Okay, so it's moving towards the upside, but it's below the forecast. These dots over here, this yellow or orange or brown, whatever you name it, okay, this one, okay, this brown color, it's going towards the upside, but the print is below it. Okay, so in a nutshell, if we talk, we can see inflation pressures moving toward the upside. Okay, you can clearly see this. Okay, this is something, this type of charting is something that you don't see on a regular economic calendar, and this is what you can see in Errante's videos. Okay, so what do we know from the US CPI, from the headline CPI, is that the print is going towards the upside. Now let me take you towards the other story of the core CPI. What do we know from the core CPI? As we know, the target of just give me one second. Okay, as we know that the target of this inflation story, how much it shall be, that is like 2 and 3%, somewhere between this one. Okay, so if we look at that headline CPI, it's okay, it's in this target, like you can see it was like 2.7, I guess 2.7 or 2.9, somewhat over there. But if you look at this core CPI, it's clearly above the target. Like look at the October, it's like 3.2, 3.3, 3.3, 3.3. Okay, and over here, same over here, and now the same is expected, okay, from this one. Okay, sorry, it's not expected, it was the last print. 3.2 is what we saw, so it is above even this 3 threshold as well. Okay, so this is something we can say, that there are inflationary pressures. Okay, this is the outcome of this all CPI charting that we saw. The story doesn't end over here. Okay, I'll explain you this later on. The calendar. Okay, I'll explain you this later on once I'm done with this one. What do we know? Okay, now let me take you towards this SEP, okay, summary of economic projections. And what do we know? That the inflation is kind of stickier as compared to they expected or signaled in 2024, and it's a little bit of hawkish as well. Okay, so because of this inflation, the Federal Reserve is a little bit hawkish. Okay, and now if we look at Federal Reserve, what they have done is they pushed back the rate cut expectations due to inflation pressures. Okay, this is also some sort of a hawkish news. And then we have the CPI is important news. This is what I've told you. Okay, and now there is a threat of tariffs to be imposed on many other economies and as well. And when this thing happens, okay, when the tariff story happens, it feeds up into the inflation story. Okay, if that's the case, then obviously inflation may go up, and Fed doesn't want to see this, that down the line, okay, like on a span of 6 months, and later on maybe a span of a year, they see that the inflation is just skyrocketed again and again. Why? Because of this tariff stories. And then suddenly Powell comes and jumps into the market and say, man, that hey, we were doing better, but this tariff story has you got this inflation out of our range. Okay, so this is something that is very, very important. We need to keep this in mind. Okay, and what Federal Reserve is saying, it's seeing one rate cut for this year and a maximum of 36 basis point of a rate cut. Okay, this equates to like one rate cut of a 25 basis point, and then like 7 or 8, something like that, seven of that little points as well. Okay, so and now what do we know in December? In this on January 15th, we saw this the December print, and we saw this energy cost going towards the upside, and then this headline CPI, it also went towards the upside from 2.7 to 2.9. So what do we know from this Fed annual story? It's clearly pointing toward the high inflation story. Okay, so now what do we have in a nutshell? What do we see is the inflation picture from here, it's going towards the upside, and then from the Federal Reserve also, it's moving towards the upside. And now I need to explain you a further, prospect of what can happen and what can we do. Okay, for that purpose, you need to focus on this one. Okay, this is the news, and when the actual is out, I'll fill in the actual over here. For now, there are three categories. Okay, this is the forecast one, what is expected on a regular economic calendar, and this one is for the dovish side. I've marked with the red one, and this one is for the hawkish side. Okay, so what happens is that if we have a reading below than 3.1, okay, that can bring a weakness in the USD. Okay, and same thing goes for this the CPI as well, the headline CPI below 2.7. And on the other hand, we have if we have the hawkish reading, we have a hotter print, and those levels must be like at least 3.3 and 3% or above than that one. Okay, this is what you need to keep in your mind. This is a threshold. Okay, and how are these formed? Okay, these are formed from the polls of if you have access to Reuters or Bloomberg polls, and then you can have this over there. This is basically the number of analysts going and polling that what are their dovish and hawkish, dovish and hawkish, you can call signals or thresholds. Okay, this is that. So now keep this in mind, what we need to do of this. And now let me explain you that what pairs shall we see. Okay, now this is something that I'll be speaking on. Okay, see, if we have a weak CPI, okay, a weaker CPI print, and that will be in line with the weak PPI print that we saw earlier. Okay, so when we have this one, this can be a bearish sign for the USD. Okay, and then this bearish sign will add up into the rate cut expectations, and then Federal Reserve, that was like some sort of a hawkish over here, may move into a bearish side. Okay, and when this happens, the market may move into a risk on scenario. Okay, in the risk on scenario. And what does risk on means? It means that the GBP and its euro may move towards the upside. Okay, and for this purpose, in this risk on scenario, what is your main task? You need to find a currency that is like a stronger currency for now. Okay, in case of this weaker USD. Okay, you need to find a stronger currency. And what is a stronger currency? One, we have this GBP. Okay, let me get this over here. Okay, if we have a weaker, let me write. Okay, one, we have the GBP, because yesterday we saw some hawkish comments from the men. Okay, and first, she was hawkish, and then she said that, man, I will be looking for a 50 basis point of a cut. And then yesterday again, she, you had this word twist and said, no, no, wait, we have to go hawkish. Okay, this is what she said. I'm just giving you a summary. There was many things she told. I'm just giving you a summary. Okay, so GPP into a hawkish side, and then JPY. Okay, the Bank of Japan, okay, is hawkish. Okay, or now they are expecting, at least they are expecting for a hawkish shift in their policy. Okay, and then for the time being, you can look into the AUD as well, because the CZ of AUD is towards the upside, and you can see this rates are also up. Rates are also up, and then with this given strength in commodities, okay, is pushing this AUD towards the upside as well, at least as compared to the euro and other ones. Okay, why did I not mention euro over here? Because euro has its own problems of this tariff and all that stuff. Okay, a tariff story won't affect the GBP as much as it will affect the euro. That's why I have noted GBP on the higher side. Okay, now what happens if we have like hot CPI? Okay, I've already showed you the values. If you have a hot CPI, what do you need? What do we need to see? This means that the rate cut, please understand, the rate cut expectations will move towards the downside, because obviously when the CPI is higher, they will try to at least maintain or hold their rates. They won't go towards an upside. Okay, now you might wonder, so why they will just go for a hold scenario and they won't go towards the upside? The reason for this is that, because if they need to go to the upside, the job market is not that stronger, it's not that hot, and the other metrics are not that hot that they can say that, okay, we will see a bomb exploding into the US CPI, and then they need to go for the rate hike scenario. Okay, that's a different story. I don't want to explain you right now, okay, because this will get longer. So what happens if we have a hot CPI? The rate cut expectations will go towards the downside, and in that scenario, okay, we can look at towards the weakness of the euro. Okay, we can look at the weakness of the euro, especially the German side. It's going into weakness, and a little bit of GBP, but you need to be very careful on this one, because right now the sentiments are bullish ones. Okay, and then NZD. Okay, keep this in mind. Why I've mentioned GBP over here? Because of the tariff. Okay, NZD is already in the weakness, and the CZ is terribly down. Okay, so these are the three pairs that you must keep in your mind while looking for a hotter CPI. In short, what do we know? In short, investors or traders, okay, what they will see is that they would want to avoid the going short in the USD dollar. Okay, USD. Why? Because there are certain reasons. Number one is uncertainty. Okay, you need to agree with me on this. There is a lot of uncertainty on a political side. There is this war scenario. Okay, and this this Ukraine war and this Palestine war. There is a scenario over there. Sometimes there is different news, and the other time there is a different news. So that also adds up into this uncertainty. Okay, and then there is a tariff war. Okay, there is a tariff war. Tariff war also plays its part. Okay, right now, recently we saw that Trump has, it's expected to impose a 25% tariff on steel, I guess, all steel items, whether if I'm correct with this exact percentage, but tariffs are applicable. Okay, so these all things, even though we see a hotter print or a softer print, these things will prevail at the same time. Okay, because the CPI is right now a minor print as compared to the outcome of these three. Okay, or I would use the word tariff, because it contains this uncertainty, war, and tariff itself. So this is a minor one right now, but later on, if we have this tariff story or anything moving on, then this will be followed. So you need to keep in mind. Okay, for example, like you have you have a weaker, let's see, a weak CPI print. Okay, print, and then you expect the market to go down. Okay, USD goes down on a weaker CPI print, and then after some time you see see Trump, and he says, okay, tax imposed, tariffs imposed, and now what next? You can see USD towards the upside. Okay, so this, the ultimate solution or the ultimate bingo point is this tariff story. Okay, I have explained much. Now let me take you to the chart for a while. Okay, as I told, this video might be a little longer because it's based on the US CPI. It's a very major event. Okay. Okay, this is our economic calendar. I have already mentioned this. It's less than like 7 hours we have over here. Let me get this out of the way. And now I'll just take a minute and explain you. Yesterday at this part over here on our social media of the Errante, I have already explained you that this was the over here. It was a comment by men, and this was an order block as well. It worked pretty well. Okay, over here, this is a Hikinashi chart. And now the thing that's most informative right now is if I'll just click this over here, and you can see these small ones. Let me show you this one. Okay, uh, this one, see, for the majors. Let me get this one here. This one, Euro USD, it's a small IB. GBP USD, it's a small IB. USD CAD and USD Swissy, a small IB. Okay, what a small IB means is that if you know what an initial balance means, an initial balance calculated with a few number of days and 80 hours calculations, I won't go into the calculations. If you have a small IB, it means that now a breakout is imminent. Okay, it has to come, a breakout has to come. And now if I'll just get rid of this Hikinashi chart, then you can see that this is a huge space over here that needs to be filled. Okay, now this is liquidity over here. Now this needs to be filled, and if we have a stronger print, okay, then this can be the case. Okay, keep this in mind. The same chart, it's similar for the euro and for anyone else. Okay guys, I'm really sorry. This is a larger video of 17 minutes, but trust me, I had to explain each and everything. Thank you. Have a good day. If you have any questions, do let me know.